Massive valuations and brutal earning calls to warnings from the people building AI, models becoming commodities, and even AI going to space. This week was unusually busy with all the AI big tech companies in the news. Here are the 9 most important things that happened in AI this week. Let's start with the biggest stories. The first one is OpenAI. The market is jittery, but insiders are doubling down. OpenAI is going for a massive fundraise, somewhere between $50 billion to $100 billion. This pegs its valuation at $750 billion to $830 billion. This is insider capital making its biggest bets on AI. Just 3 months ago in October, OpenAI was valued at $500 billion. And look who's rumored to be investing in this round. We've got Amazon, $50 billion, SoftBank, $30 billion, Nvidia, $30 billion, and Microsoft at $10 billion. And that's not all. Sovereign capital funds from the Middle East are also looking at investing in OpenAI. The deal is expected to end in Q1 of 2026. But here's the clicker. OpenAI is reportedly planning an IPO for the end of the year 2026. Yes, in Q4. They're accelerating their IPO plans given the heated competition with Anthropic. This week, the AI race went orbital. Elon Musk said that the real limit to AI isn't models or chips, it's energy.
Yeah, I think the limiting factor for AI deployment is fundamentally electrical power. So it's really all about the sun. And that's why one of the things we'll be doing with SpaceX within a few years is launching solar-powered AI satellites. Right.
His vision is solar-powered satellites and space-based compute. Elon Musk is said to be considering a merger of SpaceX with either Tesla or XAI. It's planning an IPO in June to raise $50 billion at a valuation of $1.5 trillion. SpaceX's current valuation is $800 billion, and XAI is valued at $113 billion. Elon is not alone in his vision. We've got China, who's also planning space-based AI data centers, combining satellites, solar power, and orbital processing. Why space? Because space offers massive solar energy, natural cooling, and strategic independence. Polymarket priced the odds of a SpaceX and XAI merger by the end of the year at 28%. Now let's move to earnings week, where AI hype meets with financial reality. 4 of the biggest AI players reported earnings this week. You've got Microsoft, you've got Meta, you've got Tesla, and then you've got Apple. Let's start with Microsoft. CEO Satya Nadella opened the call by saying, "We're only at the..." Let's start with Microsoft. CEO Satya Nadella opened the call by saying,
"We are in the beginning phases of AI diffusion and its broad GDP impact. Our TAM will grow substantially across every layer of the tech stack as this diffusion accelerates and spreads. In fact, even in this early innings, we have built an AI business that is larger than some of our biggest franchises that took decades to build."
But the market wasn't impressed. The stock dipped because Capex is exploding, even though Microsoft delivered stellar results. Azure revenue hit $50 billion in a single quarter. Azure is Microsoft's biggest business, and the strategy is clear.
When it comes to our cloud and token factory, the key to long-term competitiveness is shaping our infrastructure to support new high-scale workloads. The key metric we're optimizing for is tokens per watt per dollar.
Build the best token factories, massive AI data centers, run models on top, and ship apps across the stack. Microsoft also unveiled its latest in-house AI chip, Maya 200, a second-generation AI accelerator offering 30% better performance per dollar than the existing infrastructure. That strategy of Microsoft is expensive. Capital expenditure hit $37.5 billion in Q2 2026. This is almost up 70% from a year ago. This spooked investors. Next up, we've got Meta, this week's investor darling. Meta delivered impressive results and doubled down on a very specific AI vision. It is no longer a social media company. It's a deep tech AI company. The strategy has 5 pillars. First, frontier models. Meta builds and controls its own large language models. Second, personal superintelligence. AI that understands your history, your interests, your content, and your relationships. Third, LLMs fused into feeds and ads. AI baked directly into recommendations and monetization. And fourth, classes are the interface. AI that sees what you can see, hear what you can hear, and assists in real time. And fifth, all of this will run on Meta compute. The Capex guidance, $115 to $135 billion. But Wall Street loved it. Stock is up. And then there's Tesla. And what did Elon say at his Q4 2025 earnings call?
With the advent or with the continued growth of AI and robotics, I think we actually are headed to a future of universal high income, not universal basic income, but universal high income.
Tesla's pitch is no longer about cars, but about autonomy. It's about cybercabs and humanoid robots as the future. Musk's prediction, less than 1% of humans will drive in the future. The Optimus humanoid robot isn't expected till late 2026 with a broader public rollout likely in 27. But Musk is clear about the bottleneck, which will happen in 3 to 4 years. It's about chips and memory, and that's why he wants to build a Terafab. Tesla's Capex around $20 billion, modest compared to Microsoft and Meta. Wall Street not so happy. Stock was down, but rose on the larger SpaceX merger talks that we spoke of earlier. And next up comes Apple. As Tim Cook put it, a quarter for the record books. Apple stock jumped, driven by staggering iPhone demand. And Apple was explicit. India is now a major growth engine for the company. But the real focus of the call was Apple Intelligence. Cook said Apple's AI push is now possible because of the power and efficiency of Apple silicon. Apple already has dozens of AI features available in 15 languages. These AI experiences are personal, private, and deeply integrated across Apple's platforms. Under the hood, Apple is building everything on the Apple Foundation model, or AFM. 3 things to note. Google's AI technology will provide the foundation of the personalized version of Siri. At number 2, Apple will continue to build on its own AI products. And number 3, AFM, or Apple Foundation model, will run on device and in private cloud compute. And Apple believes that this dual approach is the key differentiator. Next up, megabets and the shift to the application layer. Apple acquired Q.ai for $2 billion, strengthening its push into on-device and wearable AI. Q.ai specializes in context-aware, low-latency AI systems that are designed to run directly on devices, enabling silent interaction, lip reading, and real-time assistance without sending data to the cloud. At the same time, Nvidia and Google backed Synthesia at roughly a $4 billion valuation, up from $2 billion just a year ago. Synthesia builds AI-generated video avatars, letting companies create training, marketing, and explainer videos without cameras, studios, or actors. So the money isn't leaving AI, it's moving upstream. Next up, open models and our AI models becoming a commodity. This week, some of the strongest voices echoed this sentiment. Larry Ellison, executive chairman of Oracle, said that all major AI models share the same fundamental flaw. They're trained on the same public internet data, same inputs, same knowledge, same limits. According to Ellison, that's why the models are becoming a commodity. The real opportunity isn't in building larger public models. It's applying AI to private enterprise data where the real value lives. Then came Jensen Huang. He has already been saying that open models are about 6 months behind frontier labs. Nearly 80% of startups are now using open models because they are good enough and far cheaper.
And we now know that open models have also reached the frontier. Still solidly is 6 months behind the frontier models, but every single 6 months, a new model is emerging, and these models are getting smarter and smarter.
Elon Musk also chimed in that open models are at most a year behind closed frontier systems. And finally, the Indian Economic Survey echoed this shift at a policy level. It warned against blindly chasing frontier AI, especially capital-heavy races that only a handful of global players can afford. Instead, it pointed towards small language models that are domain-specific, open source, and frugal. Next, let's talk about chips, memory, and the AI hardware boom. If you want to know who's winning the AI race, look at the hardware players. Samsung just posted record revenue of $65 billion and a 208% jump in profit. The hero here isn't the GPU, it's HBM, high bandwidth memory. Supply is so tight that Samsung is already sampling the HBM4 in 2026 and possibly 2027. Memory, not GPUs, has become the ultimate limiting factor for scaling AI. And that's why Samsung stock is soaring. Next up, can we really control AI? Last week, it was Demis Hassabis, CEO of DeepMind, warning that increasingly autonomous AI systems pose real risk. This week, Dario Amodei, CEO of Anthropic, went much deeper. He released an approximately 20,000-word paper titled The Adolescence of Technology, Confronting and Overcoming the Risks of Powerful AI. He warned that we are only 1 to 2 years away from super intelligent systems that could outperform tens of millions of geniuses. He outlined 5 risks: autonomy risk, misuse for destruction, misuse for seizing power, economic disruption, and indirect destabilizing effects. 2 weeks in a row, the people building frontier AI are saying the same thing. Capability is accelerating. Control has to keep up. Next, all is not so rosy. Layoffs beneath the AI boom. Even as AI spending is surging, companies are still cutting people. Amazon announced it will eliminate about 16,000 corporate jobs globally. It is its second major round of cuts in 3 months. Dow said that it will cut roughly 4,500 positions as it shifts more aggressively towards automation and AI. Finally, let's talk about signals and side stories. These aren't headline drivers, but they show where AI is colliding with the real world. First, bias in AI assistants. Did you know most voice assistants default to female-sounding voices? And researchers warn that this reinforces gendered stereotypes of service and subordination and can normalize verbal abuse. Second, AI errors in the justice system. In Australia, AI-generated information surfaced in a murder case, raising serious questions about reliability, verification, and legal accountability. At number 3, we've got teen safety and restraint. Meta has paused certain AI-powered features for teenagers, citing unresolved safety concerns. Fourth, we're talking about ethics from India. India has reiterated that there will be no compromise on ethical AI use, especially in public and government offices. And finally, institutional investment. IIM Ahmedabad received 100 crore rupee endowment to establish a school of AI, signaling long-term talent and governance, not just hype. Small stories, big signals, but that's what happened in AI this week.